Hello and welcome everyone. This is Professor Siddharth Surana. I hope you guys are doing good और मैं तो हमेशा मस्त ही रहता हूँ. Welcome to episode number 5 of revision cum amendments for May 22 and November 22 exams. Previous year 21-22 assessment year 22-23. In the last class we stopped at first chapter of volume 2, total chapter 17, IT authorities and their powers. So now we go ahead. Next chapter that we have is search, seizure and survey. So two parts of the chapter, search and seizure is the first part, survey will be the second part. Let's understand. Illiterate people call it raid, professionals should call it search, but a lot of scenes from the movie Raid you will get to see here. First case, what are the circumstances in which a search can be initiated? You have been given summons to be present in the last section of the last chapter, or notice of 142.1 in assessment procedure where you are asked to file your ROI. You will not respond or you have not responded. If you don't come, they will come. If you don't come, they will come. However, because these are cases of non-cooperation, your AO has got a better option, that is best judgment assessment, and thus he will conduct best judgment assessment under section 144. So they have the power but they don't conduct search. So practically what is the circumstance when a search is conducted? Whenever assessing officer has information that assessee is in possession of undisclosed, most important word, money, bullion, jewelry or any other valuable article or thing, if there is any such information, then the assessing officer will conduct a search. What is sufficient information to conduct search? As per the Supreme Court judgment of Ajit Jain, there is no definition of sufficient information in the Income Tax Act, but as per Supreme Court judgment in the case of Ajit Jain, information received from a central government agency, CBI was the agency in this case, will not be sufficient. Information received from a central government agency will not be sufficient as held by CBDT in the case of Ajit Jain. But what is sufficient information? That is still not defined. What is definitely not sufficient? Information from a central government agency. In order to conduct a search, you will need an authorization, popularly called as warrant. Search cannot be conducted without an authorization. So, the senior IT authority, CCIT, DGIT will authorize the AO. These are the 5 AOs, Additional Joint Deputy Assistant ITO. The CCIT, CIT are the top 2. CCIT, CIT will authorize the AO, and the additional or joint only if empowered by the CBDT. If Papa has given permission, then they can pass on their authorization to the junior AOs, that is Deputy Assistant and ITO. This image was the toughest of all to procure, because this is that scene of the movie where this officer Ajay Devgan goes to the senior director to take authorization, permission, because without this permission he was not allowed to conduct search in the premises of the politicians. So I was aware of the scene. I tried to do all the search on all the various search engines that can I find this scene, can I find this image anywhere. Unfortunately, all other scenes of the movie were coming, but this one particular scene which I wanted was not coming. Then I also have subscriptions to OTT platforms, I think Hotstar or Prime, one of the platforms this movie is there. So I played the movie, I was waiting for this scene came, and then I was trying to take the image, and then of course I forgot. I was aware of this, but I forgot that you cannot take screenshots or screen recording when you are watching anything on these OTT platforms. So screenshot was not allowed by that platform. So then unfortunately I have the scene in front of me. Now what do? I can see the scene and nowhere else I am getting it. So then I had to pause the scene, keep my phone down, pick up another phone, take photo from the second phone, and therefore if you observe, the photo is a little blurred because I tried everything but there was no other way out. So this picture was clicked from another phone on the phone which it was paused. But then the outcome is very good. Students are liking what they have seen in this book, and that all the efforts are worth it. Also for these revision lectures, at the end of the lecture, when the students are very happy, they thank, it gives a feeling of pride that okay, if we are doing something, the students are finding benefit from that. So thank you for all the support, and if you support like this, we continue to do the hard work. Alright, so CCIT, CIT can authorize the AO, and additional and joint if empowered can pass on. Can assessee get copy of reasons? Supreme Court judgment again, Dr. Pratap Singh. Copy of reasons will not be given. Assessee is not entitled to get copy of reasons. The only remedy he has is file a writ petition under Article 226 at the High Court under the Constitution of India, but there will be no copy of reasons. In fact, we will not give any copy of reasons to the IT authorities as well as the ITAT. The copy of reasons, if required, will be submitted to the High Court. If at all a writ petition is filed, but assessee will never get copy of reasons. Now, once they show you the authorization, what are their powers? Once they get their authorization, first information, then authorization. Now they have come to conduct a search. What are their powers? Power number 1, they are allowed to show their I-card and enter your premises. Any place, any vessel, vehicle or aircraft also they will be allowed to enter. After entering, what they will do? Neither Garba nor Bhangra. What will they do? They will search the people who are already in or who are entering or leaving the premises, and they will of course search the place, vessel, vehicle, aircraft also. They will search every corner of the premises. If required, they will break open the lock of any door, box, cupboard, locker, if obviously the keys are not made available. Just because they have the power to break, they will not break it. If the keys are not made available, they will break. They will examine all books of accounts, all documents, even if they are in electronic form. They will examine everything and place identification marks on the books of accounts and documents, just like we do this. So this time let me do it in this. Don't tell me to change it to green color, but they have the right to place identification marks. They will check all the assets in your premises, whether it is your jewelry, your property, everything will be checked. They have the power to seize books of accounts, take away with themselves, documents and assets also. Search is very dangerous because they can take your books. See, understand, examine all books, take all books, examine all documents, take all documents, examine all assets including stock in trade, seize all assets, but they are not allowed to seize stock in trade. They can examine. When it comes to examine, they can examine all, but seizure of stock is not allowed. So we also come across the power not available. Seizure of stock not allowed, sealing of business premises not allowed, and arresting of the assessee will not be allowed. These three powers are not going to be allowed: seizure of stock, sealing of business premises, and arrest of the assessee. The authorized officer can also do provisional attachment of the property, where he can take your property and assess you, then ask you to pay tax. If you don't pay tax, he has already attached your property. There is also a concept called deemed and constructive seizure, when the volume, weight or characteristic of the asset is such it is not possible to physically seize. In class, I always give the example of aircrafts of Vijay Mallya. It is not possible to seize because they don't have place to keep it. Then they will issue something called a prohibitory order, where the asset will physically be with you, but you cannot remove, part, sell, transfer, gift or anything. This is known as deemed or constructive seizure. With respect to the books of accounts, documents and assets found in your premises, there will be the following presumptions that we will draw, and if the presumptions are not true, then the burden of proof will be on the assessee. What are the presumptions? That they belong to the assessee, contents are true, if there is any handwriting, sign, stamp, attestation or execution, it is of the same person of whom it appears. We are going to be drawing these presumptions, and if not correct, then it will be the duty of the assessee to prove that it is not correct. Next, we can have something called requisition. When your books of accounts documents are already seized by some other officer under other law in force, then we will request that officer to submit the books of accounts to us, but only if the custody was taken by force. If anything was voluntarily submitted by the assessee to this officer, then requisition concept cannot apply. That was the Madhya Pradesh High Court judgment of Samta Construction Company. Next concept is, now that we have seized the books of accounts and documents, what to do? Every day morning, agarbatti, chandana, tiri, every day morning are we required to do agarbatti? No. What will we do with the books of accounts, documents and assets? First, let's talk about the books of accounts and documents. We will use it for computation of income, tax, interest, penalty, and we will pass the order. And we have mentioned order under 153A, but then in assessment procedure, I will teach you that the concept of reassessment and search have undergone tremendous change. The whole concept is deleted. In fact, the order of search will no longer be passed under 153A. The amendment is that this order will also now be passed under 147 only. 147 will now be any income escaping assessment, whether by way of reassessment or search, both will be merged into one concept. So we will talk about that amendment in the next chapter, assessment procedure. So within 30 days from order, it will be returned to the assessee. If the department wants extension, then there are two conditions to get extension beyond 30 days. But if proceedings are over, there will be no extension. Assessee can object, sir, if the proceeding is over, why do you want extension? But the decision whether to give extension or not give extension will be exclusively with the CBDT, and but still assessee can take copies or extracts. So decision will be with CBDT, copies can be taken. This is how they will be utilizing the books of accounts and documents. Now what about the assets? If the assessee gives explanation within a time, there is a time limit prescribed 30 days from the end of the month. If the assessee gives explanation, then the asset has to be returned to the assessee. But if the assessee does not give explanation within the time, then the asset will be auctioned and we will use the money for what? To recover any existing tax liability of the assessee. Possible that past tax liabilities you have not paid. Recover fresh liability. Because of this order, there will be fresh liability. We will recover that liability. Any liability decided by Income Tax Settlement Commission. Again, we will go to the chapter and you will realize that ITSC also is abolished. ITSC, AAR, these two concepts are abolished altogether. If there are government dues under other laws, say you have custom outstanding or you have any other duty, excise duty outstanding, GST. And finally, if there is a balance, which will never happen, but in case there is balance, it will be refunded to the assessee. This is how we will be utilizing the books of accounts, documents and assets. Next, we have the power to call for information. Information from one assessee about other people. From firm, we can call for name and address of partners and their share. From HUF, name and address of the manager and members. From trustee, agent or guardian, name and address of that person of whom he is a trustee. Supposingly, I am the guardian of a minor child. So, name and address of that minor child. From any assessee, details of any rent, interest, royalty, annuity or more than 1000 rupees. If I am paying more than 1000 rupees rent or more than 1000 rupees interest or more than 1000 rupees royalty or brokerage or anything, then they can seek information about the assessee to whom I am paying all this. A stockbroker, any of the brokers, details of all the receipts. So, if I put money in my demat account, if I withdraw money in my demat account, if I do any trading with the money in my demat account, the broker's duty is to provide all these details to the department. And from any person, a statement of affairs and accounts verified. Final accounts can be requested from any person, but this power can be exercised only if there is a pending proceeding. So, if the order is passed, if the case of this assessee is over, then we cannot ask for any information from this assessee. If the order is passed, we don't have to ask for it, except in two cases. If they take approval of this authority, then they can, or if they have to submit it to some other country under bilateral treaty of 90 or 90A to honor the treaty promises, then we may ask for this information even if your proceeding is over. So, normally this information can be taken only if the proceeding is pending, but in two cases, we can take the information only if the proceeding is over. This takes us to the second part of the chapter, the power of survey. Survey is basically collection of information. You may or may not be a criminal. Where can a survey be conducted? Any place of business or profession. In my, as an AO, I get a jurisdictional area. In that area, any place. Let me tell you, whole income tax law can become faceless, assessment can become faceless, appeal can become faceless, but search and survey cannot become faceless. An AO cannot search anybody's premises on video call. That's not possible. Okay. So, search and survey will remain physical. Officers will have jurisdiction, and within their jurisdiction, any business premises. Because objective of survey is to check asset in books and physical assets. Cash stock as per books, cash stock as per physical. So, they can come only at business place. Any business profession place outside his jurisdiction but occupied by an assessee in my jurisdiction. Supposingly, you are my assessee. You have one office in my area, I can come there. You have another office in some other area, I can go there also, because you are my target, you are my assessee. Okay. Any place where a charitable activity is being conducted. In the name of charity, in the name of being human, people have done lot of inhuman activities. So, we will conduct survey to check what exactly you are doing. And if the books of accounts of these places are kept somewhere else, it is possible that the books of accounts of these places, because the office is small, you keep the books at home. So, we can then come at your home also. If the books are kept somewhere else, then we will have to come there because we want to check books. Idea is only to check books. If you don't have books at this place, then we come to whichever place, including residential house. Normally, residential house not allowed. But if books are kept, we can go to the residential house also. So, any business place in my jurisdiction, any business place outside my jurisdiction but of my assessee, any charitable place, and any place where books of accounts and documents are kept. The restriction is on entry, not on exit. At business place, they can come whenever the place is kept open. If office is open, they can enter. Means office is locked, they cannot break the lock and enter. They will just apply a seal and go and say that open this office only in our presence. But they cannot break the lock. If office is open, they can come. And other place, can they go to other place? Yes. We saw they can go to charitable activity place. We can go to a residential house also if books are kept. They can go between sunrise and sunset. The restriction is on entry, not on exit. Once they enter between sunrise and sunset here, or if the office is open here, then they can stay for as long as they want, finish their work, and only then they will leave. Okay, so restriction is on entry, not on exit, and entry has to be done at this respective place. Office kept open, then they will enter other place between sunrise and sunset. Once they enter, what are their powers? They can enter the premises and ask for information. Same as search. Imagine how similar they are. Examine all books, all documents, all assets. So in search also, examine all books, examine all documents, examine all assets including stock in trade. Here also, examine all books, all documents, all assets including stock in trade. So till here it is same as search. Place identification marks and make copies. Again same as search. Seize all books of accounts. Same as search. Seize all documents. Same as search. But this is what makes search and survey different. In search, they can seize assets excluding stock. Here, any asset cannot be seized. So as far as examination power is concerned, search and survey are absolutely same. As far as seizure power is concerned, for books of accounts and documents, search and survey are same. But for assets, search they are allowed, but not stock. But in survey, they are not allowed to seize any asset. That's the difference. This is where we identify the difference between search and survey. They can keep the books of accounts for 15 working days, but if they want to keep beyond 15 working days, then they have to give reasons in writing and take prior approval of CCIT, CIT. Survey can now be conducted at a function ceremony event, ongoing function ceremony event also they can come and conduct survey. Main target being to find out how many expenses or how much expense you have incurred to organize that function. Once function will get over, it will not be possible to identify. But any kind of questioning can be done only after the function is over. They can examine the scale of expense, but questioning after function is over. Survey can be conducted by TDS, TCS officers also to check whether TDS has been properly deducted or no, to check whether TCS has been properly collected or no. And very important, if any incriminating data, any doubtful data is found in course of search, then at any point of time they can convert the in course of survey, then they can convert the survey into search at any point of time. That's your 133A survey. Let's go to 133B survey, which is called power to call for information, also called door to door survey. Search for these terms. If they use the term power to call for information, if they use the term door to door survey, that means they are talking about 133B, not about 133A. If they use only the term survey, that means 133A. If they use the term power to call for information, that means 133B. This is important because this was tested in an MCQ. They said power to call for information, and students got confused which survey it is talking about, 133A or B. Power to call information is under 133B, where they have only one power. They will come to a business premise during working hours and make you fill up a form 45D. Only one power, no other power. Business premises and make you fill up a form 45D, and non-compliance will result in penalty of 1000 per default. So only one power, no other power. Only one power, no other power. Are we clear on this? Next, there will be a prescribed IT authority who will send a notice. So basically the system will be, notice will be sent by one authority, reply you give to that person, and assessment will be done by some other authority. When you will watch that faceless assessment video on YouTube, you will come to know that how we are now dividing the teams into assessment unit, the review unit, technical unit. So basically communication will happen between assessee and one person, and the responsibility of assessment will be of some other person. The IT authorities have the power to inspect register of shareholders like any other document. The juniors have some power. The same power will be available to senior. It is like senior will have all powers available to junior. Very, very basic and easy. T scheme, transparency, efficiency, accountability. This is what I was talking about in the last class, last concept when I talked about faceless, that in almost everything in the law they are writing we will make a scheme, we will make a scheme, we will make a scheme, but they have made a scheme only for assessment till now. Once that is successful, for all these things also, we will make a similar scheme, faceless collection of information under all these things. And focus carefully. 133, door-to-door survey, prescribed authority, shareholder registered, senior has power of junior. This can become faceless. But do you observe carefully that they have not mentioned 132 search and 133A survey, because these two things cannot happen faceless. This has to be done by a physical visit. Every proceeding is going to be treated as a judicial proceeding, means you have to obey his orders, he is the judge. And CBDT shall have the power to disclose information about the assessee if it is in public interest. If it is going to help the public, then they can release a press note, release a public information, and they can communicate this to media. So this is how your concept of search, seizure and survey works. Let's go ahead to our next chapter, assessment procedure. One of the biggest chapters, and plenty of amendments have taken place. These are revision cum amendment lectures. So whenever we have an amendment, we have to give time to that. Assessment is a procedure of calculation of two things, income and tax. There are some duties of the assessee: file ROI, verify, apply for PAN, link your PAN with Aadhaar. Most important, pay your tax. Responsibility of the AO will be to process your ROI, ask questions, seek answers, seek information and explanation. Every time he wants anything from you, he will have to give you a notice. The notice will open your assessment, any assessment open with notice, and one day when this order will be passed, your assessment will get over. You are ever asked when does assessment get over? That day when the order is passed. That day when the order is passed, he will decide your liability in this and give you a demand notice where he will request you to pay the liability. Assessment procedure starts with this section and ends with this section. That's the whole list of duties to be done by assessee as well as AO, starting with a very first and a very important section, one of the most important sections, filing of return of income, section 139(1), which is divided in two parts. First, I will complete the left side. Return filing is compulsory for whom? Every assessee is not required to file ROI. And second, what are the due dates? What are the due dates? So return filing will be compulsory for whom and what are the due dates? See, due date we can study only if return is compulsory. If it is not compulsory, there is no question of due date. So we will first learn who are the assessees for whom return filing is going to be compulsory. First, every company, whether public, private, listed, unlisted, every company, every firm including LLP. Firm and LLP, all provisions same except presumptive taxation under 44 AD and as per amendment 44 ADA. Any individual HUF, AOP, BOI, AJP, if that GTI, that means income after exemptions. Have you taken your exemptions? Yes, but you are yet to take your deduction. And before exemption under 54 series. So 54, 54B, D, EC, 54G, F, GA, you have not taken those exemptions. Before that exemption. So before your chapter 6 deduction and before your 54 series, if your income is greater than basic exemption limit. See, tax you have to pay on income after this exemption and after this deduction. If you are asked what is my net taxable total income, in that you will take 54 series exemption also and you will take the deduction also. Tax has to be paid on net income, but to decide whether return filing is compulsory, you have to take GTI also before 54 series exemption. If you are a resident excluding R, NOR, that means can I say we are covering ROR? Whichever assessee has ROR. In individual HUF we have ROR, so we will cover only ROR. But for AOP, BOI, AJP, we have only resident, non-resident, so we will cover resident. So wherever it is RNOR, RNOR will not be covered. Only ROR will be covered. And wherever there is no RNOR or ROR, let me be clear, ROR, RNOR are only under individual HUF. For other assessees, there is no such bifurcation. It is only resident and non-resident. So if you are resident, which will not cover anybody who is RNOR, and you hold any asset outside India, any asset including financial interest or signing authority, then return filing is compulsory. That asset can be held as beneficial owner, the person who has provided funds to acquire the asset, or beneficiary, the person who is getting the benefits, the incomes arising from the asset. 99% cases, beneficial owner and beneficiary will be the same person, and that person has to file ROI. In a rare case, if they are two different people, say I buy a property in London in the name of my wife, so I am the beneficial owner, she is the beneficiary, then both of us have to file. I buy a property in Nepal in the name of my son, I am the beneficial owner, he is my beneficiary, then both of us have to file. I buy a property in Germany in the name of one of my other good friends, as good as as good friend as my wife only. So I am the beneficial owner, she is the beneficiary. Both of us have to file. If they are two different people, then both have to. If they are the same person, then of course that person has to file. But if they are two different people, then both of them have to file. But if clubbing provisions are applicable, so asset transfer to spouse, clubbing is applicable. Minor child, then clubbing is applicable. If clubbing is applicable, then only beneficial owner will file. In that case, beneficiary will not be filed. Then it will be only for beneficial owner, not for beneficiary. So beneficial owner means who provided the funds, beneficiary who is receiving the benefits, both have to file. But if clubbing applies, then only beneficial owner has to file, and if it is the same person, then of course that person has to file. And next, if your aggregate deposit in current account has exceeded 1 crore, total deposit in any current account, aggregate means one or multiple, you can have 10 current accounts, we will take total of all of them. If your aggregate foreign travel expense have exceeded 2 lakh, it can be for yourself, your family members, anyone. It can be one foreign trip, multiple. Aggregate means total of the year for yourself or anybody else. And same manner, aggregate electricity expense exceed rupees 1 lakh in a year. So current account more than 1 crore, foreign travel more than 2 lakh, electricity more than 1 lakh, or any other notified case, then return filing will be compulsory. The amendment that we see is with respect to the due date. So I will not discuss the amendment first. I will first discuss the due date, then go to the amendment, because amendment is with respect to the due dates. Okay. But before that, are we clear for whom return filing is compulsory? Every company, every firm including LLP, individual HUF, AOP, BOI, AJP, if that GTI before 54 series. So that means income before deduction before 54 series exceeds basic exemption limit. Resident excluding RNOR having asset outside India, beneficial owner or beneficiary, but if clubbing applies, only beneficial owner. Current account more than 1 crore, foreign travel more than 2 lakh, and electricity more than 1 lakh, any other notified, then filing of return will be compulsory. And what will be the due dates? Any assessee covered under transfer pricing, 30th November is going to be your due date. For assessees under transfer pricing, the due date of return filing is going to be 30th November. And here there is an amendment. If you are a partner in a firm covered under transfer pricing, so imagine firm has transfer pricing, firm will have November. You are partner in that firm, so your due date will also become November. This point was already there here. So those who have studied the last year's law and watching these lectures only for the purpose of amendments already know that firm has audit. So firm's due date will be October. Partner's due date will also be October. But this provision was applicable only for the audit due date, was not applicable for transfer pricing due date. Now we will apply that here also. That means any assessee under transfer pricing, 30th November, and if the assessee is a partnership firm, then the partner's due date will also be 30th November. Second, any assessee which is audited under any law. So once it's a company, it will definitely be audited under any law, means statutory audit is compulsory, irrespective of whether there is tax audit or no, irrespective of turnover. And if you are a partner in a firm which is covered under audit, then for those assessees, due date will be 31st October. Last year it was amended, so current year there is no amendment. It was earlier September, then they made it October, but they made it last year only. And all other cases will go to 31st July. So listen, transfer pricing November, audit under any law October, and other cases July. November, October, July. November, October, July. And also note that if the firm has transfer pricing or audit, tax audit, firm has transfer pricing or tax audit, firm cannot have company audit. So firm has transfer pricing or tax audit, then the due date of course will be November and October respectively. The partner's due date will also be same as the due date of the firm. Let me put it like this, the due date of the partner will be same as the due date of the firm. The due date of the partner will be same as the due date of the firm. Okay. In the audit due date already this provision was there, but now in the transfer pricing part also this provision has been incorporated by way of an amendment. And with respect to the due date, we have one more amendment. If you are the spouse of a partner, so there is a firm, firm has partner and partner has spouse. There is a firm, firm has partner and partner has spouse. Firm's due date will be November, October or July based on transfer pricing, audit or other cases. Partner's due date will be same as the firm. So if firm has transfer pricing, partner also November, firm has audit, then partner also October, and other cases partner also July. But the spouse is an independent assessee. So the spouse due date has got nothing to do with their due date. But if you are the spouse of a partner who is governed by the Portuguese Civil Code. Now sir, what is Portuguese Civil Code? PCC. What is this? Some people may be aware of this because Portuguese civil code in our country is applicable only in those states where once upon a time there was Portuguese rule. Goa, for example, I have given you the example of a Goan couple. Here, Goa, for example, was under Portuguese rule. So, let me take the example of Goa. What is the Portuguese civil code? This means that any income that you earn, any income except salary. Salary will not be covered here. But other than salary, whether it is rental income, whether it is business income, whether it is interest income, whether it is sale of any asset, any income that you earn, you have to give half to your wife. Spouse means wife will earn, she will give to husband, husband will earn, he will give to wife. All your incomes except salary. Salary you don't have to give. Salary is your hard work, your employment, you can keep. Other than salary, any income that you earn, half you have to give to wife. Good, no? Portuguese were good people. Under Portuguese civil code, only half of your income has to be given to your wife. So in Goa, only half of the income has to be given to wife. Rest of India, full income has to be given to wife. Rest of India, full income has to be given to wife. So half of your income, any assessee governed under the Portuguese civil code, half of your income will be given to your spouse. And in that case, the due date of the spouse will also be same as that of the partner. So the due date of the firm will be applicable to the partner also, whether November, which is an amendment, or October, which was existing rule, or July. If the spouse is covered under PCC, then the spouse due date will also be same. The due date of filing for such spouse will be same as that of the partner, that is November where it is transfer pricing case, October where it is not transfer pricing but audit, and 31st July in all other cases. So firm due date based on this data, partner due date will be same as firm, and spouse of partner will be same due date but only if covered by Portuguese civil code. That's the amendment that has taken place. Bulk filing, e-filing, this in class, in full course lecture also I tell students to ignore, so don't waste your time here. Come to the three important sections, 139, 3, 4, 5. Loss return, belated return, revise return. Three important sections: loss, belated, revise. Whenever you file a return in which you are showing a loss, that means it will be called a loss return. And as per section 80, following losses can be carried forward only if you file your return on time. That means if you miss your due date, then you will lose carry forward of this losses: business loss, speculation loss, specified loss, capital loss, OMRH loss. Full course lectures we try to learn these provisions in class itself: business loss, speculation loss, specified loss, capital loss, OMRH loss. Business loss, speculation, specified capital, OMRH loss. These respective periods are actually given in the sections of set off chapter. Anyway, set off will come under our revision separately. 5 losses can be carried forward only and only if your return was filed on time. 5 losses can be carried forward only and only if your return was filed on time. But in case you miss your due date, remember, if you don't have anyone in life, you definitely have God, but in income tax it will be CBDT. So 5 losses can be carried forward only if you file your return on time. If you miss your due date, you will not get carry forward, but of course CBDT will be available to help you. But section 80 therefore is not applicable to the following losses. Which 2 losses? House property and unabsorbed depreciation. So 5 losses you have to file on time, and 2 losses you get your carry forward even if you file belated return. House property and unabsorbed depreciation. This can be tested anywhere. Practical sum, MCQ, anywhere. 5 losses: business, speculation, specified capital, OMRH. Business, speculation, specified capital, OMRH. Only if return is filed on time. And 2 losses you get carry forward even if you file belated. But listen, you still have to file. Not filing is not okay. I always say this in class. Late filing is okay for these 2. Late is okay, but not filing is not okay. If you don't file, you will not get carry forward. File, belated is also okay. And filing of ROI in time is applicable only of the current year loss. So if this year I suffer loss, I have to file return on time. I am talking about these 5 losses because these 2 it is not applicable. Only on current year this is applicable. If I file on time, I will get my carry forward, whether it is 8 years, 4 years, whichever. In that period, if I don't file return on time, then that year's loss I may not get, but the brought forward loss will continue. Supposingly, I have a loss 3 years ago. I filed my return on time, carry forward started. This year, I filed my return late. So this year's loss, of course, not allowed. But will the brought forward continue? Yes, because this section 80 applies only in the year in which you suffer the loss. In future years, this section 80 will not be applicable. And one more thing I would like to tell you, that 139.3 is not a section in which you can do filing. It's only definition of loss return. When you file, whether you show profit or loss, if you file on time, it will be treated as this return, and if you file late, it will be treated as this return. 139.3 only gives definition. You cannot do filing under this section. When you file your return, you have to choose, sir, it is this or this. It is on time or belated. If on time, then 139.1 it will be treated, and if belated, then 139.4 it will be treated. So 5 losses only if return is filed on time. 2 losses you can file belated return. CBDT is always available to give you extension under genuine circumstances. Next concept, belated return, and there are amendments in time limits in a lot of upcoming provisions. So belated return, any return that you file after the due date will be called belated return. So if you miss your due date November, October, July, belated return. But for belated also there has to be a time, no? Till last year it was this much, end of the assessment year or completion of assessment, whichever is earlier. So our due date used to come to 31st March, but now they have reduced 3 months, and now they say 3 months before the end of the assessment year. So if this is your previous year, this is your assessment year. Let me write the previous year and assessment year of your exam. This end of the assessment year was the last date in the existing provision. What is the amendment? We are reducing 3 months, and the last date will now be December. 31st December 22 will be applicable for May and November 22 students. So 3 months before the end of the assessment year, you can learn this date if you want. 3 months before the end of the assessment year or completion of best judgment, out of the two, whichever is earlier. 3 months before the end of the assessment year or completion of assessment, out of the two, whichever is earlier. Okay. So the amendment is that the time limit of belated return is reduced by 3 months. But of course, here also CBDT can grant condonation. If you miss this time limit, you can approach CBDT and request for condonation. If you file your return belated, you are allowed to file return belated within this time or extended by CBDT, but you will face some problems in life. What problems? You will not get the carry forward of those 5 losses, business speculation specified OMRH and capital. There will be interest under section 234A for late filing of return. There will be fees. Here also there is an amendment. So earlier what was the rule? Fees will be 1,000 for income up to 5 lakhs, and if more than 5 lakhs up to December 5,000, after December it was 10,000. But now after December it is not allowed only, no? So that 10,000 fees is deleted. 10,000 fees is deleted. Now there is only this fees. 5,000 rupees and income up to 5 lakh, then 1,000 rupees. So any assessee who misses the due date of return filing and income is up to 5 lakhs, then 1,000 rupees, and income is more than 5 lakhs, then 5,000 rupees. The 10,000 fees which was there last year is also eliminated. And assessee will also lose income related tax benefits. So your deduction like 10AA, your deduction like any income related chapter 6 deduction, 80 IA or all 80 JJAA, 80 JJA, any income related tax benefit will not be allowed. So there are problems. You can file belated, but there are problems. But all problems, one solution, you can always approach the CBDT. So we are clear about the 2 amendments here. 3 months time is reduced, and here the 10,000 fees gets eliminated, because after December anyways you will not be allowed to file. Next comes the concept of revised return. We are all human beings. We can make mistake. Some of us get married, so of course we can make mistake. So when in marriage there is no possibility of revised also, but here if you rectify an error of an already filed ROI, that will be called revised return. What is revised return? A return filed to rectify mistake of an already filed ROI. So of course only if there was a return filed earlier it is possible. If there was no return filed earlier, it is not possible. What is the time limit to revise the return? Earlier also it was same as belated. Now the same amendment has taken place. So earlier it was end of the assessment year or completion of assessment, whichever is earlier. Now here also they have reduced 3 months. So same amendment exact. Instead of end of the assessment year, the new time limit will be 3 months before the end of the assessment year. Kya bola? 3 months before the end of the assessment year or completion of assessment, whichever is earlier. 3 months before the end of the assessment year or completion of assessment, whichever is earlier. And of course, CBDT is always available even in loss return, belated return, revised return. You can file unlimited times, but you have to do it within the time limit. The original return has to be on time or belated, both will be allowed to be revised. You can reduce your income. It is not necessary that every time you revise your return, you have to increase your income. You can reduce your income also. Every time you can reduce your income, it is not compulsory to increase your income. Revised return can be done only by filing a revised ROI, not on a plain piece of paper. You cannot write a letter to the AO, my dear AO, please revise. No, you have to file a revised return. You have to file a revised return. Supreme Court judgment, GoH India Limited, and the revised return will fully replace your return except the date of filing. So date will be taken from the original return and data will be taken from the new return. Date from original and data from the new return. That's our concept of revised return. 139, 1345. 1345. Filing of ROI, first section, subsection 1, and loss belated revise. Take these sections very seriously, please. Very seriously. Now let's go ahead. These provisions, if you want, you can read. They are not at all important. Even in the full course, we don't give much respect to. Then next is defective return. Whenever you are not attaching any documents like your tax audit report or your transfer pricing report, then it will be treated as a defective ROI. If you don't rectify it within 15 days, then it will be treated as invalid ROI and thrown in the dustbin. It will not be applicable for certain notified cases. They may release a notification. If at all any such notification is released, whenever we keep our RTP lecture, I will be putting it on YouTube. If there is any notification on circular to be discussed, I will be covering that. So MCQs of RTP will be solved, subjective questions will be discussed and not solved, and circulars will also be discussed. PAN, permanent account number, identity with income tax. It is compulsory for some people. Every person who is accessible to tax in respect of self or other person because of clubbing, and your income is more than basic exemption limit. If you are trustee of a trust, if your business is likely to have turnover more than 5 lakh, if you want to register under any of the, you want to take customs registration or GST registration, then any resident who is doing transaction more than 2,50,000, but excluding individual. So we are talking about resident HUF, resident firm, resident company, and that will include the manager, the karta, the director, the partner, the CEO, whoever is the principal officer will be included. Any other notified person, these people applying for PAN is compulsory. But PAN is not compulsory for whom? Any person who is not covered above, of course, non-resident, minor child, any farmer, PAN will not be compulsory. Whenever you do any high value transaction, you will have to quote your PAN, or alternatively, you can link your PAN and Aadhaar and you can only quote Aadhaar, no problem. If you have no PAN, you quote your Aadhaar, our system will automatically allot you a PAN, and your PAN and Aadhaar will be linked with each other. And if you have PAN and Aadhaar both, then link them and quote Aadhaar. In this way or that way, your PAN and Aadhaar will be linked with each other and you can quote any one of them in your high value transactions. You will be having a 10,000 rupees penalty if PAN was not applied or not quoted or wrong quoted, or you have 2 PANs, then you will be having 10,000 penalty per default. This takes us to the related section that whenever you file ROI or you make PAN allotment application, now you don't need to make also, because you just quote your Aadhaar and we will allot PAN. But earlier you had to quote. If you don't have Aadhaar, no problem, quote enrollment ID, and if you don't have both, then you kill yourself, because you cannot be here and be in India and not have Aadhaar. If you don't have Aadhaar, you do not exist only in the eyes of the government. If you have PAN, you intimate your Aadhaar number on a procedure which is laid down. Go to income tax website, click on that link my Aadhaar, and your PAN and Aadhaar will get linked, and failure will make your PAN inoperative. Central government may notify exception. They have actually notified. So residents of Assam or Jammu and Kashmir, if you are 80 years and above, if you are non-resident, if you are non-citizen, there are some assessees for whom this section is not applicable only. Next, tax return preparer. If you don't know how to make your return, then you can call this person. Any person can call except company or any person covered under tax audit. They are not allowed to call TRP. Anybody else can call. Individual can call TRP. Salaried employees can call TRP. And who can become TRP? CBDT will make you TRP. It is the brainchild of CBDT, except CA, lawyer and officer of bank where assessee has account. 3 people cannot become TRP. Other than these people, these 3 people, anybody can become TRP. The scheme will be framed by CBDT to enable assessing to file ROI and provide the qualification, disqualification, training, everything will be decided by CBDT. As I said, this is the brainchild of CBDT. This is under exclusive control of the CBDT. From AY 78, the system changed to ITRs, where you don't have to attach any documents or papers except those PDFs that you have to attach of your tax audit report and all. So no need to attach any TDS certificate, any LIC receipts, any mediclaim receipts. AO can call those if needed. Otherwise, we will not be having any annexure. Who will do e-filing? Who will do paper filing? What forms will be online? What forms will be physical? Everything will be again decided by CBDT. CBDT governs the entire income tax law. CBDT takes decisions, then officers have to implement the decisions taken by CBDT. Verification of ROI. Once upon a time, when signature was required, it was important, but now it is OTP based verification. So you will never be sure who actually is doing it. It is not the assessee, it is not even a CA, it is the article of the CA who calls the client, sir, give me the OTP on your phone. No, it has become that, but on paper they say individual, you yourself, or if you are not in India or mentally incapacitated, then any authorized person. In case of HUF, the Karta is not available, or Karta has died or not in India, then any other adult member. In a firm, managing partner, if there is no managing partner, then any adult partner. LLP, designated partner, and designated partner is compulsory in LLP, but in case again not available, then any other prescribed person. In a company, managing director, if the company does not have MD, then any other director. If it's a foreign company, then whoever is the holder of power of attorney. If the company's management is taken over by the court receiver, then the receiver appointed by the government. I am doing it fast because honestly speaking, it is not much. Relevant company under liquidation, then that liquidator appointed. Company under insolvency, then that insolvency professional who has been appointed. In case of local authority, principal officer, political party CEO, the principal member here, and any person who is authorized. A return which is not verified will be treated as invalid return. It is as good as you have not filed return. And this brings us to the last duty of the assessee, where duties of assessee will get over and duties of department will start. Last duty of the assessee: every person who is required to file ROI must file and pay tax, and that tax will be called self-assessment tax. Any tax which is paid up to 31st March of previous year, any tax which is paid in previous year will be treated as advance tax, and any tax which is paid after the previous year, any tax which is paid after the previous year, that is in the assessment year, that will be called self-assessment tax. Tax in the previous year will be called advance tax, and tax in the assessment year will be called self-assessment tax, that I have already mentioned here, and failure will make you assessee in default. Now we come to the duties of the assessing officer. Every time an AO wants to do something against you, he will give you a notice. Notice will open your case, order will close. Open with notice, close with order. First notice 142, one which has got three purposes, but practically only the first is important. Other two are only on paper. Very, very important. Make assessee file ROI if not filed. So whenever an assessee does not file ROI, he will be given 142(1) notice to make him file. Others, not very important. Furnish books of accounts documents and submit information explanation. Time limit. What is the time limit? No time limit. So 142(1) can be issued. The notice of 142(1) can be issued at any point of time, because there is no time limit to issue 142(1) notice. However, of course, it has to come before the last date of passing the order, because after the last date there is no scope of giving the notice. And if you don't comply with the notice, failure will attract penalty of 10,000 and best judgment assessment. Penalty of 10,000, best judgment assessment. So whenever an assessee does not file ROI, AO will give 142(1), no time limit, and failure will have penalty of 10,000 and best judgment assessment. And now, in order to facilitate faceless assessment, instead of your AO, the notice can come from some other party, some other person also. We can do that also. When whichever information we receive from you, to verify that, we can take third party information like debtor confirmation, creditor confirmation. We also do it in audit. We can take third party confirmation also, but using that material against you, before using that material against you, we will give you PONJ. PONJ means principle of natural justice. We will give you an opportunity of being heard before using that material against you. Whenever valuation of any asset is required, we can make a reference. The AO will make a reference to the valuation officer. There are two types of people who do valuation. Someone called a registered valuer, someone called a valuation officer. Registered valuer is an independent person who will be approached by the assessee. Independent person who is having his own practice, license given by CBDT. And this person is an officer of department. So he will be approached by the assessing officer. The AO will appoint valuation officer for valuation of any property of the assessee, and if there is a difference in the two values, then opportunity of being heard will be given. Other points are not important. Next case, special audit. Whenever there are complications, books of accounts or nature of business is complex, the accounts correctness is doubtful, and we cannot go into detailed checking because the same transaction has repeated again and again. There are 1 crore transactions of 15 rupees. It makes it 15 crore rupees. Difficult to trace 15 rupees transaction, and because of that, the AO will request for a special audit. First, he will give you an opportunity. PONJ, principle of natural justice, that dear assessee, please explain. If you are not able to do it, then he will take prior approval of CCITC. He cannot order special audit directly. And then he will tell you to get a special audit done. So chronology is, first there will be complexities, then he will give opportunity, then he will take permission, then he will tell you to get a special audit done. Even for a part, only for stock register, only for fixed assets, only part of books can also be done. Only a part may be complicated. Only one ledger may be complicated. So only that much can be audited. And even if you have already been audited, is it possible that tax audit is already done? Still it will have to be done. Still it will have to be done by a CA holding COP who will be nominated by CCIT CIT, but the fees will be paid by the central government. CA will be nominated by CCIT, fees will be paid by central government. Failure to comply here also will result in penalty of 10,000 and best judgment assessment. Failure to comply with 142(1) and special audit both, penalty of 10,000, best judgment assessment. Within what time can AO tell you to get a special audit done? At any time during the proceedings, ongoing proceeding, before order, at any time. And you have to furnish the report within how much time? Within the time given. He will tell you, bring report in 60 days, bring report in 80 days, within the time given in the notice, and the total cannot be more than 180 days. The total cannot exceed 180 days with extension. So if he has given you 60 days, extension can be maximum 120 days. Original time plus extension, total of maximum 180 days. Again, T scheme for this notice, for valuation, for special audit, for everything, for the third party confirmation, we will be having a faceless scheme. Once faceless assessment is successful, we will be applying this scheme of transparency, efficiency, accountability everywhere under income tax. Now we come to various different types of assessments. First assessment, summary assessment, that is intimation, which is called assessment but not an assessment because the AO has got trust on the assessee. Na 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 ना 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 मुझको ना जितना मुझ पे उतना इस दिल को तुझ पे होने लगा एतबार तू ही ये मुझको बता दे. The AO has got trust on you more than he trusts himself. I trust you more than I trust myself. That's the translation of the song. I know if I teach in Hindi, the South Indian students will not understand. But if I sing in Hindi, if there is a movie dialogue in Hindi, if there is a web series, you will understand everything. Your preferences are also selective. So whenever an assessing officer has got full trust and faith on the assessee, then he will do something called intimation. Intimation means summary assessment. That means he will not do a detailed checking of your case. No question answer, no information, no notice, most importantly, no order, and that is why we say it is only called assessment. Actually, it is not an assessment. It is only called assessment. It is not an assessment. The AO will accept everything that you have written in your ROI, make a summary and send it to you. Whatever you have written, he will accept and send it to you. Whatever you have written, he will accept and send it to you. So, no notice, no order, only a summary will be made, and that summary will be sent to the assessee. That is why we call it summary assessment. However, he has the right to make some minor corrections, arithmetical error. If you have made, he can make that correction. That is allowed, and that is why in intimation we get on email, there are two columns, as per ROI, as per AO. If at all any such minor error is made, if you have claimed loss carry forward in belated ROI, you are not allowed, but you have claimed, he will rectify. Any income related deduction, any 10AA or anything in belated ROI, that is also not allowed. But if you have taken any incorrect claim, like you have claimed ATC more than 1,50,000, then that will be disallowed. So he will make that correction. Any expense which are disallowed by the auditor in the audit report, or the auditor has said that there is some increase in income that has to be done. Any qualification given by the auditor in the tax audit report, but the assessee has not shown in the return of income. Tax audit is responsibility of the auditor, but return is responsibility of the assessee. So Auditor has given the qualification above, disallowing some expense or adding some income, but assessee has not shown, then he will make that correction in the intimation. So these are the corrections that can be made by the AO. Other than this, no notice, no question, no information, no explanation, no order. Whatever you say is going to be accepted by the assessing officer. Now 143(1) is compulsory in all the cases. Even if the AO wants to do scrutiny, it is compulsory that he should first send intimation and correct these mistakes, increase your income, and that increase will only increase your tax, not bring penalty. Later, if he does scrutiny and increases your income further, I'll tell you the formula of penalty. This is the revision lecture, so you cannot be surprised or shocked. You cannot only depend on revision lecture. You're like, sir, samjha nahi. You have to first do the full course, then only the revision is of sense to you. Then you have to do the revision, then only the MCQ lecture is of sense. This is a process. If one thing works, then why will I do other things? If only full course works, then why I will do revision? If only revision works, then why I will do full course? Everything has got its own relevance. You can't say that, sir, I did only revision, I did only this book, but I could not get. You have to do everything. This is revision. Okay, so I'll just remind you, tax in assessment minus tax in intimation, that difference is treated as underreported tax. As per ROI is not taken. Compulsory intimation has to be done, that tax has to be changed, and assessed tax and return tax, assessed tax minus intimation tax is your underreported tax. This intimation has to be issued. Issued means it will leave the department. It can reach you at any point of time. Again, there is an amendment. So if you remember earlier, it was 12 months. The amendment is here also. So in belated return, they have reduced 3 months. In revised return, they have reduced 3 months. In intimation also, they have reduced 3 months. Later, you will see scrutiny notice also, they have reduced 3 months. Time limit to complete assessment, section 153 also, they have reduced 3 months. They are reducing time everywhere. So 9 months from the end of the year in which ROI was filed. Earlier, it was 12. Amendment is 12 has changed to 9 months. Earlier, it was 12. Now, it has changed to 9 months. So if you file your return on this date, you add 9 months, you get 31st December 23. But if scrutiny notice has to be sent, then intimation has to be sent before that, because I already told you intimation is compulsory to be sent before doing any kind of scrutiny. Obviously, summary assessment can be done only if return was filed. If you don't say only anything, what will I accept? But can I revise my return after getting summary assessment? Yes. Yes. If that other time limit, it is not end of the assessment year, it is 3 months prior. Just make this correction, that amendment which came in belated return, that amendment has to apply here. 3 months prior to the end of the assessment. 3 months prior to the end of the assessment, that new time limit of belated. If that has not, new time limit not of belated or of revised, that has not expired, then you can revise your return. Basically, what is the time limit to revise your return? 3 months prior to the end of the assessment year. Please make this correction. The amendment of revised return time limit has to apply here. 3 months prior to the end of the assessment year or completion of assessment, whichever is up. If this has not expired, then you can file your revised return, because this is not assessment. This is not assessment. It is only called assessment, but there is no order. So you can revise, but only if this time limit of 139.5 has not expired. That was your first assessment, summary assessment. Second assessment, scrutiny assessment, also called as regular assessment. Here an order will be passed. In intimation, there is no order. This is your first assessment. Whenever you believe there is underpayment of taxes, how can it happen? Showing less income, more expense, or losses or deduction, or showing lower rate of tax, then AO will give notice under 143.2. So notice will be 143.2, order will be 143.3, and he will conduct regular assessment. For this regular assessment 143.3 and bus judgment, the next section also, there will be a T scheme. In order to do scrutiny, notice has to be given. This notice has to be served, means this time it has to reach the assessee. Whenever the word issue is used, that means leave the department. Whenever the word search is used, that means it has to reach the assessee. Here also, the time limit is modified. It is 3 months with effect from AY 20 to 23. 3 months from the end of the relevant, 3 months from the end of the financial year in which the ROI was filed. So this was 6. 6 is now cancelled. It has become 3. So in revised return, belated return, intimation, scrutiny, 4 places till now, time limit has reduced by 3 months each. Okay. So applying the time limit, 3 months from the end of the year in which the ROI was filed. Earlier the date used to come to September. Now the date will come to June. Notice under section 143.2, can be given obviously only if the return was filed, because what will be scrutinized, and once again non-compliance will result in penalty of 10,000 and best judgment assessment. Penalty of 10,000 and best judgment assessment is going to be applicable. Can we revise our return after getting notice? Yes, because notice is beginning of assessment, not completion of assessment. If my question was 143.3, then answer will be no, because this is completion of assessment. So after getting notice, can we revise return? Yes, but after passing order, we will not be allowed. Again, here also that same. It is not end of the assessment year. Now it has changed to 3 months prior to the end of the assessment year. If that time limit has not expired, if that has expired, then not possible, because it is whichever is earlier. So 3 months prior to the end of the assessment year or completion of assessment, whichever is earlier. This is not completion of assessment, this is beginning. So if this time limit is pending, then you can revise your return. A small note, sometimes questions are asked by ICAI on this. Distinguish between the two notices. So this is with or without ROI, this is only if ROI is filed. Here there is no time limit. Here there is time limit to serve, which is amended 3 months from the end of the year in which the return was filed. Here they will ask for specific information. Here they will ask for general information. That's your concept of scrutiny. Next concept, the concept of best judgment assessment. Section 144, cases of non-cooperation. Here also there will be order. So in 143.1 there is no order, but scrutiny and best judgment there will be order. Whenever you fail to comply with what? 142.1 notice. We already saw that. Special audit or scrutiny notice, then we can conduct best judgment assessment. We can also conduct best judgment assessment for failure to comply with filing of ROI. Listen, you don't file ROI, we can do best judgment. It's our goodness that we give you this notice first, but we have the power to do best judgment assessment. If you don't file your return, we can conduct a best judgment assessment. And what are the other 3 cases of non-cooperation? 142.1, scrutiny notice and special audit. If you don't comply, then he will do best judgment assessment. Before doing best judgment, he has to give a show cause notice. This is like an opportunity of being heard. This is like last warning. Dear assessee, I told you to get a special audit done, but you are not doing. Now I will do best judgment assessment. Last warning. But it is not required for 142.1. It is not required for 142.1 primarily because you failed to do this. AO gave you this notice. This itself is like a show cause notice. Now after you don't comply with this, again you don't expect a notice. So there will not be a double notice. That is what we mean by this. No time limit for show cause notice, but of course it will be before the last date of passing the order. This is also regular assessment. This is not special. Whenever you get notice, if you cooperate, then 143.3, non-cooperation, then 144. This is also regular assessment. It is also called as ex parte assessment because the party is not getting involved in the case. The assessee is not getting involved. Order is appealable, but your appeal will be very weak appeal, because the first question that the CIT appeals will ask you will be, why did you not cooperate with the department? And in this order, he can never grant you refund in this order. Next, the concept of protective assessment. When we have 2 brothers, can you see Ramesh and Suresh? Whenever you have 2 brothers, Ramesh and Suresh, I have taken an example. There is an income between them which is under dispute. So there was father's income, father died, then the income between Ramesh and Suresh is getting disputed. Who will be paying tax? Who will be paying tax? We will take tax from both. This power can be applied only for tax, not for penalty, for both. And then you can fight your court case. One day, supposingly Ramesh wins the case, we will refund the tax of Suresh. Suresh wins the case, we will refund the tax of Ramesh, but we will take tax from both. To start with, we will take tax from both. That's the concept of protective assessment. Whenever required, Joint Commissioner can issue directions to his juniors. Remember, additional and joint are seniors. So the juniors are new, Deputy Assistant ITO. They can issue instructions. It can be suo moto, on request by the junior, or application by the assessee. The directions will be binding. So if the senior is giving you instructions, you have to comply with the instruction. Non-compliance is not going to help you. Assessee cannot challenge the directions, but can challenge the AO's order. So you can appeal against the order, but you cannot challenge against the direction. And if the direction is prejudicial, harmful, against the interest of the assessee, then you have to give an opportunity of being heard. But any instruction to investigate is not prejudicial. Investigation power is always available. So any instruction to investigate is not prejudicial, and in that case there will be no opportunity of being heard. That will be given. This is going to be your concept of power of commissioner, joint commissioner to issue directions to his junior. Now comes the all important discussion about faceless assessment, detailed discussion about how there is an organization called National Faceless Assessment Center, Regional Faceless Assessment Center, what is assessment unit, verification unit, technical unit, review unit. This itself is about a 1.5 hour concept. So this entire concept of faceless assessment, which is an amendment. Yes, it is a revision cum amendment lecture, but I am not covering this because already a separate lecture, detailed discussion of faceless assessment. In fact, 2 languages, Hindi, English as well as only English, already available on the channel. Scroll the channel a bit, search for the video, and you will get in the thumbnail itself, you will get how will assessment happen, faceless. All these provisions I have already covered in that part. So detailed discussion is already covered. I am not going to consume more time here in the revision lecture. I am not covering faceless assessment because I have already covered. You can watch that video. I am going to go ahead. These 3 heads, method of accounting will be as per income tax. So salary will be due or receive, whichever is earlier. House property will be annual value. Capital gain in the year of transfer of asset. You cannot say, sir, I am following cash or accrual. But for these 2 heads of income, the assessee has an option. You can follow cash or accrual. If you follow accrual, then it is compulsory for you to follow ICDS. ICDS will be compulsory if you follow accrual system of accounting, and if you don't follow ICDS, then we will be conducting best judgment assessment. Which will be discretionary. In 144, if you don't comply, it is compulsory best judgment, but here it will be discretionary best judgment assessment. And there are a couple of sections related to ICDS, 145A, 145B. I have uploaded those that PDF on ICDS on my Telegram channel. This is the Telegram channel. In fact, amendment summary also is uploaded on the Telegram channel. You will have to search in the document section for that. Search, you will get it. The link also I am putting over here. In fact, every video that I am uploading, in the description of the video, you will get link of my Facebook page. You will get link of my YouTube channel. Already you are watching. Telegram channel, Instagram I do private stuff only. It is friendly stuff, not professional stuff. But in case you want to stay in touch, Twitter ka handle I am putting over there. All my various channels and places, my website also, in case anybody wants to order any lecture or order any book, whether handwritten book or MCQ book or main textbook or question book, CA inter book, any book you want to order, everything I am putting, all the links that I am putting. In Telegram, you will get only free material like amendment summary, ICDS summary, full books. Of course, you don't even, are you a CA student that you expected free? Full book cannot be free. There is immense cost involved and efforts involved in that. So book cannot be free. We do it at cost price. We do not take home a single rupee in books. Whatever is our printing and delivery cost, we have the lowest price of books. We do only that. We are not earning a single rupee profit in books. And whatever free material I want to give, I am doing it in the Telegram channel. So ICDS summary you can get from. Now we come to that concept which I was telling, that it has undergone substantial change. This is the introductory paragraph over here. Okay. So this introductory paragraph, I am not wasting time in reading. I am directly explaining what this is. From here the provision starts. So the introductory paragraph is maroon color and the actual provision is red color. That's the difference. Okay. I will just explain to you that currently we had 147 and 153A for search, we had 153A, and for reassessment we have 147. Income escaping assessment. Now we are going to cancel both these sections. We are going to create new 147. The section numbers will be same, 147, 148, 149, 150, but the content is changing. It is like the amendment is this. In place of the existing section 147, we are bringing new section 147. So full section is changing. You can say it is a new section, only number is same. Otherwise full section is changing, and this will cover both search and reassessment. Both will get covered. So 153A is deleted and 147 is completely new. It will include search and reassessment. Government is saying now we don't have to search for evasions. Our centralized technological system is bringing us information from everywhere. We don't have to go around searching. We are getting information from all the possible sources. So we don't have to put any time, energy or effort for searching for information. We are getting it. Are you able to understand what I am saying? Okay. So we will make the provisions a little easy. They said we will make it easy, but they have made it a little complicated. Let's see, what do we have? Income escaping assessment, whether by way of conducting search or reassessment, a new section 147 is enacted. Number is same as the old section, but content is completely new, where order will be passed. So now we have no order in intimation, but scrutiny 143 order, base judgment 147 order, and income escaping assessment order under 147, which will also cover search cases. If any income chargeable to tax has escaped assessment for AY, then AO may subject to the provision. So we all know there is provision for notice under 148, there is time limit in 149. All those provisions are same, but there is also a new provision 148A. There is some procedure prescribed. So we will discuss that also in the amendment. The AO will assess, reassess, or compute or recompute the income, the loss, the deduction. Basically, the AO will do recomputation. Whenever the AO believes that income chargeable to tax has escaped assessment, the AO will assess or reassess the income or recompute the depreciation, loss, deduction, and basically recompute the net taxable total income and tax for the year. If he feels there is underpayment of taxes, he will do that. But they have clarified, this was already there in the old section also. If when he is doing assessment, reassessment, or recomputation, if there is any issue which has escaped assessment and such comes to his notice subsequently in the course of proceeding, then he can carry forward or add matters in the old provision. Now, those students who are from last year and are learning the amendment, this is specifically for them. In the old provision of 147, already there was a rule that I give you notice for 5 matters. I have doubts about your telephone, traveling, rent, electricity, and salary. I give you notice of reassessment. That means your case is open. Now, when reassessment is going on, I also have doubt about your other expenses, your hotel expenses, your rent, any expense which is not covered in the first notice. Can we add those matters without giving a separate notice, without any separate procedure? Yes, the same thing is mentioned here, that once he starts reassessment, after that any issue comes to his notice subsequently, then he can assess that issue irrespective of following the procedure. Procedure has to be followed only at the first time. Procedure does not have to be followed again and again. First thing I am doing is the procedure only. So, AO will have doubt about income escaping assessment. He will follow this procedure and give you the notice on selected matters. Then, if any new matter comes to his notice, he can do it without this procedure also. Okay, so first time he will follow the procedure, second time he will not follow the procedure for that particular assessment year. For that year, if the proceeding is continuing, he will not follow. What is the new procedure of 148A? He will first conduct inquiry, provide opportunity before actually giving the notice. So earlier, what was the system? He had doubt, he directly gave the reassessment notice. Now, whenever he will, the chronology will change. First, he will have doubt. Then he will do some inquiries. He will ask you also. Opportunity of being heard, punch. He will ask you also. Then, if he does not get a convincing answer, then he will give you the reassessment notice. And then reassessment has started. One day order under 147 will be passed and case will get over. But in that course, if any new matter comes into his notice, then again he does not have to conduct inquiry or give opportunity. He can just add that matter that is given here in this paragraph. Subsequently, any matter comes, he can directly add it. What is the procedure before issue of notice? The AO, before issuing any notice under section 148, first he will conduct an inquiry if required with the prior approval of the specified authority. Specified authority we will be getting here. It is going to be explained to us who will be specified authority. In section 151 we have been given about prior approval. Let me cover this here itself. If you want to do reassessment up to 3 years from the end of the relevant assessment year, then it will be CCIT, CIT, DIT, or principal commissioner, principal director. CIT, within 3 years, it will not be CCIT, it will be CIT and DIT. And if you want to do beyond 3 years, then you will have to go to the top authority, that is CCIT. At the same place, we have DGIT also. What is the senior most IT authorities? CCIT, DGIT, they are same rank officer, and second level is CIT, DIT. If you want to do within 3 years, this is your previous year, this is your assessment year, and you want to do reassessment. If you want to do within 3 years, then you will need CIT or DIT, same rank officer. And if you want to do beyond 3 years, then it will be CCIT, DGIT. This is going to be your authority. Earlier, the rule was different. Now, section 151 has also changed. So, who is the specified authority for the entire concept of reassessment? This is the answer. It will come again and again. So, I have finished it at the beginning itself. Who is the specified authority for the purpose of reassessment? Any reassessment to be done within 3 years from the end of the relevant assessment year. Then CIT, DIT, including the principal. And if you want to do beyond 3 years, then CCIT, DGIT, including the principal. This will be our specified authority. Coming back. AO has doubt about income escaping assessment. So, he will do reassessment. For that, he will follow the procedure. First time, he will follow the procedure. Then, any matter comes to his notice second time. He can do it without following the procedure also. Okay. What is the procedure? He will take prior approval of specified authority. Who is the specified authority? Within 3 years, CIT, DIT, and beyond 3 years, CCIT, DGIT, and with respect to the information, he will conduct an inquiry. He will conduct an inquiry with the prior approval with respect to the information which suggests that income has escaped assessment. Of course, PONJ has to be done. So, provide an opportunity of being heard to the assessee with the prior approval of specified authority. Again, we will give him a notice. We will give him a notice, show cause notice, and within such time as may be specified in the notice, which has to be given minimum 7 days and maximum 30 days from the date on which the notice is issued, or he can give extension of application on this behalf as to why I should not give you 148 notice on the basis of information which suggests that income chargeable to tax has escaped assessment in his case for the relevant AY, and I want to conduct any inquiry. To give you an example to make you understand this, okay, supposingly I get information from somewhere that assessee has deposited huge amount of cash in demonetization year, huge amount of cash. I get any such information, okay. Now I have doubt that there is income escaping assessment. Earlier I was directly giving notice, but in the new system the process is going to be, I will first ask my senior, sir, I have doubt, can I do reassessment? Whom will I ask? Within 3 years, then CIT, DIT, more than 3 years, then CCIT, DGIT. Correct? I will ask them. After their permission, I will call the assessee and give him a time. Minimum 7 days, maximum 30 days. Minimum 7 days, maximum 30 days. Dear assessee, you have deposited that cash and I have doubt about income escaping assessment. Do you have any explanation? Otherwise, I will start reassessment. So, listen, till now I have actually not started reassessment. I am only giving you a show cause notice. And you reply. If you reply convincingly, then I will not give notice on. I will not start reassessment. But if you don't give a convincing reply, then I will issue the 148 notice. So earlier, the moment we had doubt, we used to give notice. Now we have doubt, we first give show cause notice, minimum 7 and maximum 30 days. And then if we don't get a convincing answer, we will give the reassessment notice. Once we give that, procedure has started. Now any matter comes to the notice subsequently, then again notice will not be issued. That is basically the new system. So before the notice, one more show cause notice. There will be one show cause notice, then the actual notice. Obviously, we will consider the reply of the assessee, and then on the basis of the material on record, including the reply of course of the assessee, we will decide whether or not it is a fit case by passing an order. This is not the assessment order. This is an order in which we are deciding I will do reassessment or I will not do reassessment. He will pass an order. Again, he has to take permission within 1 month from the end of the month in which the reply is received, or if reply is not received, then within 1 month from the end of the month in which the time limit to furnish reply was expired, and he will pass an order and decide that I am doing reassessment or not doing the reassessment. But this procedure is not to be followed in which cases? Already we know that for subsequent matters we don't have to follow. Next, if a search is initiated or a requisition is made. If the AO is satisfied with the prior approval of the CIT or the principal commissioner that any money, bullion, jewelry or valuable article or thing which is seized from some other person but it belongs to the assessee. I conduct a search in the premises of X, but I know that the money, bullion, jewelry, or in the next point they have stated about books of accounts seized from other person. So I will merge these 2 points. Money, bullion, jewelry, books of accounts seized from X, they actually belong to Y. So if I conduct search in the premises of Y, then I don't need to follow procedure. Already I know that reassessment has to be done. This is a case of income escaping assessment, and now we will not do 153A, we will cover it here only. And if I conduct search in someone else's premises and I get books of accounts, documents, assets of the assessee, then also I will not follow the procedure and I will directly issue the notice. Procedure is not to be followed. In other words, if the assessee is a case under search or survey, or not survey, assessee is a case of search or requisition. If the assessee is a case of search or requisition, or a third party is under search of requisition and we find money, bullion, jewelry or documents of assessee, books of accounts of assessee, then we don't need to give show cause notice. We know that there is income escaping assessment and directly we will go to notice. So if you understand the chronology, I have doubt about income escaping assessment. So I will do 147 ka order. But before 147, I have to follow the system. 148 ka notice and 148A procedure. 148A procedure is basically before the actual notice, one show cause notice, where we will give you minimum 7, maximum 30 days and tell you that we have doubt on you and we will start reassessment if you don't give us proper reply. Assessee will give reply, then we will decide and we will pass an order in which we will decide not the tax. That's not the assessment order. We will only decide whether we want to do reassessment or we don't want to do reassessment. Only that much. First time we will follow the procedure. Second time any matter comes to our notice, we will not follow that procedure. That is clear. And if it is a case of a search or requisition of assessee or third party where books, assets or documents belonging to the assessee have been discovered, then we don't need to follow this procedure and we can directly give the notice. Whose approval we will take? Within 3 years, then CIT, DIT, and beyond 3 years, then CCIT, DGIT. New section 148 for notice. Remember, notice has to be given after following the procedure of 148A. So first there will be procedure, then there will be notice, and then there will be order. But that procedure, that first step will not come if it is a subsequent matter, if it's a search or requisition case. We are clear on that? To reassess a case, AO has to issue notice under section 148. It has to be issued after following the procedure, subject to the 2 exceptions that I told you, and a copy of order passed deciding whether or not it is a fit case. In that order, we will write that I am doing reassessment. That copy also has to be given. Prior approval is required. We already know the time limit. Within 3 years, CIT, DIT, beyond 3 years, CCIT, DGIT, and beyond 3 years, how many years? That we will see in the new section 149. The time limit of 149 is applicable. It has to be complied with only if information that suggests that income chargeable to tax has escaped assessment here. Then only we can give that, otherwise no. He will ask you to file fresh ROI. This has to be filed even if you have already filed. We can give you a single notice and failure will result in best judgment assessment. Manner of doing will be same as 144, but section number will be 147. For the purpose of section 148 and 148A, how will we decide that income has escaped assessment? We are continuously saying he has doubt that income escape assessment, income. What do you mean by income that has escaped assessment? And this is where technology will be used. Any information flagged in the risk management strategy formulated by CBDT. This is a system which police department, secret agencies, they use for checking terrorist activities, flagging. So supposingly 2 people are terrorists, they are communicating with each other in code language. They will say that the sweets have reached. Code language. This police department has got system, the research department, the secret agencies have got system that they will search for such words. All your social media channels, everything, they are keeping track of everything. Whenever they find any dangerous word, the system will give them a flag. Orange flag means moderate risk. Red flag means big risk. Similar system will be incorporated by income tax department. Assessee is doing transaction. In the system, his PAN and Aadhaar will be recorded for every transaction that he is doing. Suddenly, the system will release a notification that this assessee is a doubtful case. The system will be modified to make it like this. The software will be having artificial intelligence. Software will inform the AO that there is something wrong in this case. This assessee is not showing enough income compared to the transactions that he is doing. That is the meaning of information being flagged in our system. So, if there is any such information flagged, immediately we know that income has escaped assessment. Follow the procedure, give the notice. Or if there is any objection raised by comptroller and auditor general that assessment has not been done properly, this will not happen for everyone. This is the main source. Okay, but in these cases, okay, for the purpose of this section where search is initiated or requisition is made, survey under 133A is conducted excluding the TDS, TCS survey and the function, ceremony and event survey. If the AO is satisfied that money, bullion, jewelry which is seized from other person belongs to the assessee, or books of accounts, documents or assets seized from other person belongs to the assessee, it will be a case where it will be assumed that your income has escaped assessment. It will be deemed to be a case where your income has escaped assessment, and in that case assessee will be liable for the 3 assessment years preceding the AY relevant to the PY in which the search was initiated. So earlier when a search was conducted, then 6 years before the year of search were covered in 153A, but now if a search is conducted, then only 3 years before. So year of search, supposedly 21-22 year of search, then only last 3 years will be covered. Earlier it used to be 6 years before the year of search, now it will be only 3 years. So if a search is conducted, then we don't need any information to be flagged in the system. It is a case of income escaping assessment. Search, requisition, survey conducted, it is income escaping assessment. In fact, search of other person and books, documents of assets or assets of assessee are found, then also it will be treated as income belonging to the assessee that has escaped assessment, and 3 years assessment will be done. 3 years assessment here. Okay. In search earlier it was year of search plus last 6 years, but now it is year of search plus last 3 years. Year of search plus last 3 years will be taken into search. It will be deemed. So there are 2 cases where we will. CAG is rare, it will not happen in all cases. 2 cases where income has escaped assessment. 1, information flagged in the system using software and artificial intelligence risk management strategy. 2nd, search survey conducted, then income has escaped assessment, and we will have to do this. What is going to be the time limit? The normal time limit is going to be 3 years from the end of the relevant assessment year. So you see this is also drastically changing. Earlier it used to be 4 years, 6 years, 16 years. Now it is 3 years from the end of the relevant assessment year. If you do it within the time limit of 3 years, that means, can I say, permission from CIT, DIT will be required as per 151. But in exceptional cases, when the AO has books of account, documents or asset which reveal that assessee has income which is in the form of immovable property, that's land, building or both, shares and securities, loans and advances, deposits in a bank account, which is escaped assessment and the amount is likely to be 50 lakh or more, then we will add 7 years and make it 10 years, and in that case we will have to go to DGIT or CCIT. See, within 3 years it will be CIT, DIT, beyond 3 years it will be DGIT, CCIT. This same system was there in search earlier, 6 years before the year of search. But if 4 assets, land and building, same 4, land and building, shares and securities, loans and advances, deposits in a bank account, if the total is 50 lakh or more, 4 assets 50 lakh or more, then we were adding 4 more years, 6 plus 4, 10 years we were making. Now the time limits are changing. The change, that is, normal time limit will be 3 years, and now see, what was reassessment time limit? 4 years, 6 years, 16 years. Correct? What was search time limit? Before the year of search 6 years, and if it is a case of 50 lakh then 10 years. But search and reassessment are being merged. So now what we are doing? For both cases, 3 years from the end of the relevant assessment year. 3 years from the end of the relevant assessment year. But if that 50 lakh case comes up, 4 assets, 50 lakh total. 4 assets, 50 lakh total. Then we will have 7 years, and because it is more than 3 years, then this permission is going to be taken. These same time limits which are normally excluded also because of stay order, because of ITSC for anything, then in that case that time limit will be extended. And also a small clarification that is made, that this amendment is coming from this year, AY 20 to 23, correct? So any assessment of the past years will be continued to be governed by the existing provisions. Past year assessments will be governed by the existing provisions only. The new provisions will apply from this year. So this year people who are getting notices, some courts have already declared them as invalid because they say that now apply the new procedure. Okay. Approval of higher authority already discussed, within 3 years. Then CIT, DIT, which will include principal, and beyond 3 years, which can go up to maximum of 10 years. If it's a 50 lakh case, 4 assets and 50 lakh concealment, then we will need approval of these people. Okay. Cases where section 149 is not applicable, there is no amendment, absolutely no amendment. Here if we want to give effect to higher authority in an appeal revision reference or court under other law in force, then the time limit will not be applicable, and subsection 1 clause A will not be applicable if already the time limit had expired. So this is a detailed explanation that we cover in class. There is absolutely no change or amendment here for all the things under reassessment also. Now we will incorporate faceless under reassessment also. Reassessment also will now become faceless once assessment is successful. The rate of tax will be of the past year because the income pertains to the past year, and if the assessee proves that there is no impact on tax liability, the AO will stop, that is discontinue the procedure. Dispute resolution panel, you can just read, if you are taking elective paper international tax, then you can just read that any assessee who is an eligible assessee, that is a non-resident or a person covered under transfer pricing or a foreign company, then instead of sending the actual order, we will send something called a draft assessment order to the eligible assessee, and then we will decide whether the draft order has to be finalized or no, and there will be T scheme for this also. Now now we have done all the inquiries. Now the time has come to close the assessment, pass the order, finish the case, finish the matter. Yes or no? What is the time limit to complete the assessment? Here also there is an amendment. This used to be 12 months, which is now reduced again by 3 months. So belated return, revised return, intimation time limit, scrutiny notice time limit, and time limit to pass regular assessment order will be reduced by 3 months. Here it will be 9 months from the end of relevant AY. So we will focus only on your exam AY. No need to learn any past or future AY. Plus 9 months. This will be, you can, if possible, request you, if possible, please learn. Last date to revise is, last date to pass order is going to be 31st December 23. What about reassessment order? 9 months from the end of the year in which the notice was served, but now notice served on or after 1/4/19, it will be 12 months. 12 months from the end of the year in which the notice was served. So regular assessment 9 months from the end of the relevant assessment year, reassessment 12 months. Ignore 9 part, 12 months from the end of the year in which the notice was served. Fresh assessment order. Whenever there is original order which has been cancelled, set aside, it can be done by CIT and ITED, important for MCQ, CIT and ITED, then there will be fresh assessment by the assessing officer. There are some mistakes which cannot be corrected. So here there will be no fresh assessment, there will be annulment, order will be declared as void ab initio. This power is with CIT appeals and ITED. So who can annul the order? CIT appeals and ITED, no further action. But who can set aside, cancel the order and there will be fresh assessment? CIT and ITED. ITED can do both. CIT appeals can annul, not set aside. CIT can set aside, not annul. And here there will be no fresh assessment. Fresh assessment will come only under this case. So whenever the original order is set aside, there will be fresh assessment. Earlier it was 9 months, but you should focus. Now it is 12 months from the end of the financial year in which if CIT has set aside, then from setting aside, and if ITED has set aside, then communication to jurisdictional CIT. 12 months from the end of the year in which CIT sets aside or ITED communicates. In all the 3 cases stated above, regular assessment, reassessment, fresh, regular, refresh. If it's a transfer pricing case, if reference is made to TPO, only if reference is made to TPO, not all transfer pricing cases, then time limit will be increased by 3 months. If there is any order of higher authority which we want to incorporate, supposingly for one matter we fought case till Supreme Court, so now we will have to incorporate in our assessment order. That has to be done within 3 months from the end of the month. If it is CIT, then he passes the order, then other authority communicates. Due to the order on the firm, there can be change in the partner, because the firm ka allowance or disallowance changes, then partner ka taxable amount will change. No? So that has to be done 12 months from the end of the month in which again CIT hai to passes the order, other authority communicates the order. Whenever we want to do reassessment in 150 cases where time limit of 149 is not applicable, then we cannot check the time limit from this notice served because 149 time limit is not applicable. So here we will have another time limit, 12 months from the end of the month in which CIT passes the order or other authority communicates. Notice carefully, all the time limits are to pass the order. So we don't have to furnish copy of order by this time. Time limit is to pass the order. The AO can give you copy of order later. Time limit is only to pass the order, not to give you copy. When is assessment treated as completed? When the AO decides income and tax by passing the order. If that is done, then no problem. And there are some extensions that is going to be eligible with effect from AY 22-23. ITSC is getting abolished. You can withdraw your application. New concept has come, and AAR is also getting replaced by bar. R is going and bar is coming. We will talk about that in ITSC AAR chapters. and these are the extensions which are available. Minimum time limit will be given. Next concept, concept of demand notice. AO's responsibility, assessment order's responsibility is to decide your liability, but demand notice will request you. What? Please pay. Your liability is decided. Now, please pay. Correct? No time limit to issue demand notice, but order has to be passed on time. So, if order is passed on time, it is a valid order. Copy of order can be given at any point of time, and demand notice also no time limit, but demand notice can demand only that amount which is mentioned in the order. Demand notice cannot ask for extra amount. Supreme Court judgment, Ranchi Club. And if there is any computation sheet which is attached to the assessment order, that will be treated as a part of the order. It is like working notes should form a part of your answer. Then this amount can be demanded in the demand notice. Demand notice can demand only anything mentioned in the order, but computation sheet is a part of the order. So treat it as mentioned in the order and it can be demanded from the assessee. If the assessment order is declared as void ab initio, the assessee can claim refund, but only of the extra tax, not of the entire amount of tax paid. Only excess can be refunded, not the entire. We will also give you a intimation of, just like we give you intimation of income, we will give you intimation of loss, and all these provisions, demand notice, intimation and rectification, which is upcoming, all this will also now happen faceless. So we will be having a T scheme for this also. Okay. Now we'll talk about rectification of mistakes. Two types of mistake. Apparent mistake means clearly visible, and other mistakes means they are a mistake due to a future event. Initially they were right, but later they became wrong. Whenever there is any mistake in any order or any of the intimations, income tax intimation or TDS TCS intimation, then it will be called apparent mistake, which is not under dispute. 5 minus 1 equal to 3.5. You and me both understand it is wrong. No dispute. If he refuses rectification, you can go for appeal. Only those matters can be rectified which are not in appeal. Once a matter goes in appeal, then higher authority is involved. Rectification can be done suo moto. If it does suo moto, that means he will increase your liability. Then he has to give you opportunity, or on an application by the assessing. No form, no fees. You can just make an online application on plain piece of paper. Apparent mistake will be human error like calculation mistake, retrospective amendment, High Court, Supreme Court order. That will be apparent mistake, and time limit will be 4 years from the end of the year in which the order with mistake was passed. So whichever order we passed, there is mistake, end of the year, 4 years. But if assessee is requesting, we cannot make him wait for 4 years. That has to be done within 6 months from the end of the month of application. Suo moto, it can be 4 years, but assessee is requesting, then within 6 months from the end of the month of application. Even a rectified order can be rectified. So if we ask you how many times rectification can be done, unlimited times. Unlimited times it can be done, but it was held by Supreme Court in the case of Hindwire Industries that doctrine of merger will not be applicable, means every time we pass an order, fresh 4 years, we pass an order, there was mistake, time limit to rectify 4 years from the end of the year. Here we pass the rectified order within the time limit, there is mistake in this order. From here we will count fresh 4 years. This is not the fixed last date. Every order will have fresh 4 years. Every order. We can do unlimited times and every order will have fresh 4 years to be rectified. And as far as other mistakes are concerned, when it was passed at that time it was right, but because of a future event it became a mistake. So that can be rectified within 4 years from the end of the year in which the future event took place. 4 years from the end of the year in which the future event took place. And now time lost between making an application to the ITSC and a new section of withdrawal of application, that will also be excluded in the time limit that is computed for 4 years in 154 as well as 155. So this withdrawal amendment you will understand after I teach you the amendment in ITSC chapter. We will discuss that withdrawal case so that you clearly understand what is happening. Last part of assessment procedure, special cases when the assessee is not available. For example, assessee has died. So who will do these duties? File ROI, be present, pay taxes. If there is a legal representative appointed, like a power of attorney, a lawyer, only if appointed and only till distribution. If there is no legal representative, then legal heir will be liable, and if distribution is done, then of course everything has gone to legal heir only. So all the duties will be of the legal representative if appointed till distribution. Otherwise legal heir is always available, but maximum liability will be inheritance, remember that the legal heir will never be made to pay anything from his own pocket. Never anything from his own pocket. Okay. Then the concept of representative assessee. In case of minor, lunatic or idiot, all the duties will be of the parent and guardian. In case of non-resident, the agent. In case of trust, the trustee. In insolvency cases, the insolvency professional appointed. And in case a receiver or assignee is appointed, then such person. That will be the representative assessee. When this assessee cannot take care of himself, the representative will take care of the tax responsibilities. What responsibilities? Same, no? What will be the responsibilities? Same. File, return, be present, everything same. And what will be the right? That any tax that I pay from my pocket, I can recover from the estate. I will not pay anything from my own pocket. I will not pay anything from my own pocket. And these other provisions, you just read once. That's our chapter. One of the biggest, the biggest chapter with so many amendments also. That's our chapter, assessment procedure. We have enough time that for the day we can complete our assessment chunk, because in assessment there are total 5 chapters. IT authorities we finished in the last class. Search and assessment done now. The next 2 are small. So we will make sure that we finish. This is Shri Sant for you. Appeal means lodging a complaint with higher authority. You cannot go to an equivalent or lower authority. If you have a problem with my office staff, you come to me. If you have a problem with me, you go to my wife. You have to go to higher authority. Correct or no? You appeal. Whenever AO passes an assessment order, if you are aggrieved, you can file an appeal, for which there are 4 levels. But we divide them, because we will call the first 2 levels as appeal and these 2 as reference. Why reference? Because High Court, Supreme Court, you are allowed to go only if there is a question of law. So go to CIT appeals, go to ITAT if you are not happy with CIT appeals, go to High Court only if question of law after ITAT, go to Supreme Court after Supreme Court. Supreme Court is like your wife, you cannot appeal against the order of Supreme Court. 4 levels of appeal, but 2 will be called appeal, 2 will be reference, because only if there is question of law, only if the law is silent. It is compulsory to follow the hierarchy. You cannot directly go to Supreme Court. You have to follow the hierarchy. CIT appeals, ITAT, Supreme Court, CIT appeals, ITAT, my bad, High Court and Supreme Court. At all the levels, you have to fill up the form, pay the fees, and you have to go within the time limit. You have to follow the procedure, but very important, there are 9 orders in income tax against which filing of appeal is not allowed. 9 orders in income tax where you cannot file appeal. Which are those 9 orders? Interest under 234 ABC, non-appealable. ITAT on a question of fact, non-appealable, because you can go to High Court only if there is a question of law. Any order of income tax settlement commission, non-appealable. Any order of AAR, non-appealable. But ITSC and AAR, in the budget, they were proposed to be abolished. Between the budget, which was 2021 budget is applicable for your exam. This year's budget, 22 budget is applicable for May 23, November 23. In the budget, they said we propose to abolish, and in between, it's been a year since that budget now, they have already abolished these 2 organizations. In case your revision application under 264 is rejected or final order, so 2 sections, 2 non-appealable provisions from 1 section 264, this is the next chapter, revision. CIT passing an order under 273A for reducing or waiving penalty, non-appealable. If you make an application under 270AA for waiver of this penalty, so penalty is levied under 270A, application for waiver is done in this section 270AA, and that application is rejected, non-appealable. If that application is accepted, therefore there is no penalty. So you are happy, but the condition is assessment order. Assessment orders are normally appealable. Assessment orders are normally appealable. You can appeal. But we are waiving your penalty on the condition that assessment will become non-appealable. So see, normally assessment is appealable, but if you take waiver of penalty, then assessment will become non-appealable. And if the waiver application is rejected, the rejection is non-appealable, but the assessment order is appealable. Okay, so if penalty is gone, then tax is final, and if you want to appeal against tax, then penalty will be levied. It is like this, 9 orders which are non-appealable. Of course, they will come in their respective chapters also. So one by one. First, CIT appeal, first level of appeal, where appeal can be filed only by the assessee, because you are coming against the assessing officer. So how can the department appeal? You cannot appeal against your own officer. This appeal can be filed only by the assessee within 30 days from getting copy of order, but delay can be condoned. Whenever you have genuine circumstances, delay can be condoned, and CBDT cannot interfere with these discretionary powers. You have to submit form number 35, statement of facts, grounds of appeal, copy of order to be appealed against, and fees. You have to submit that full set. Form 35 is the Basic information, statement of facts is your full story, grounds of appeal is your conclusion, copy of order against which you are appealing, and filing fees. If your appeal is to be filed, what is the fees? Assessed income up to 1 lakh 250, between 1 lakh and 2 lakh 500, more than 2 lakh, which will be all practical cases if you have gone up to CIT appeals, 1000. And if the appeal is not with respect to income, like it's an ultra vires act, you want it annulled or something, then the basic penalty or the basic fees of 250 will be applicable. CIT will allow your appeal only if you have paid your undisputed tax. That tax which you have accepted as your liability, you pay that, then only it will be accepted, otherwise your appeal will be rejected. There is time limit given, but they say if possible, so it has got no legal relevance, to be very honest. There are so many orders that can be appealed against. You have the option to learn this list by heart, or I will give you another way, because I am known to make the complicated subject easy. All you are required to do is anything which is there, not there in the 9 non-appealable. There are 9 orders against which appeal is not allowed to be filed. So these orders you cannot appeal. You can go for writ petition or something, but appeal is not allowed. And it has been done by AO. Anything which is not in 9, I am sure I must have written. Yes, I have. Anything which is not in 9 and done by AO, then you can appeal at CIT appeals. If it is in 9, you are not allowed because it is non-appealable. If it is done by anybody else like CIT, High Court, Supreme Court, then you can't come here. Not in 9, done by AO. Not in 9, done by AO, then you can appeal. Scrutiny order, best judgment order, reassessment order, all the orders are covered over here. Appeal can be withdrawn. This will also have a T scheme, so everything is becoming faceless. And very important Madras High Court judgment, Paulson Litho works. Can AO, TRO grant you stay of recovery? Yes, in recovery chapter it is stated. Then CIT also can grant. The act is silent, but if AO, TRO have the power, then CIT appeals can also do that. That's your first level of appeal, that is CIT appeals. Let's go ahead. Second level of appeal, appeal to income tax appellate tribunal. ITAT will be the second level of appeal, and now CIT can take anybody's favor. So this appeal can be filed by assessee or department. Time limit will change to 60 days from copy of order from 30. Delay can be condoned by the ITAT. Form 35 will change to Form 36. Rest is same. Statement of fact, grounds of appeal, copy of order, and filing fees. Same memorandum you have to furnish. Okay. What is the fees this time? Income up to 1 lakh 500. Between 1 lakh and 2 lakh 1500. It will be all practical cases. It will be more than 2 lakh only. It's only time pass that they are doing. 1% of your income, but maximum 10,000. So fees will never be more than 10,000. Any appeal not with respect to income, you want to get it nullified, annulled or something, then 500. For rectification also we have to pay 50 rupees. Bikari they are. Rectification also 50 rupees. But if you submit memorandum of cross objection, then there is no fees. In the next point I will explain what is memorandum of cross objection. But remember one thing, this fees has to be paid only by assessee. For department there is no fees. Department will file its appeal free of cost. Fees is to be paid only by assessee. Department will file the appeal free of cost. What is memorandum of cross objection? It can be submitted in Form 36A by the respondent. If one person appeals, the other person is the respondent. A versus B. A is appellant, B is respondent. So the ITAT can inform the respondent that you have to fight this appeal because we have received an appeal. So respondent can give cross objection without paying any fees within 30 days from communication from ITAT, and delay can be condoned. Respondent in Form 36A will give the cross objections on the appeal so that the irrelevant matters are removed from the appeal to save precious time of the court. Now you don't have to learn the list of appealable orders. Not in 9, done by CIT, CCIT, DGIT, DRP. DRP contains 3 commissioners. Then you have to come at ITAT. Against these authorities, you can't go to CIT appeals. They are equivalent or higher. So you go to the, in fact, if anything is done by CCIT, then CIT appeals is lower in the hierarchy. So you go to ITAT. Not in 9, done by CIT, CCIT. Not in 9, done by CIT, CCIT. Then you appeal here. Can ITAT grant stay? Yes. For maximum 180 days. And if there is an extension, the maximum extension can be total of 365. So extension can be maximum 185 days. Including extension, the maximum total will be 365. So originally 180 and extension 185. So total maximum 365. But extension will be only if delay is not due to the assessee and you have to. See, undisputed you have already paid. Without that you can't appeal at CIT also. disputed ka you have to pay 20%, then only it will be accepted. And if appeal is not disposed within the time, then recovery will automatically resume. If there is any mistake in the order, rectification has to be done within 6 months from the end of the month of order. And now ITAT will also be governed by a T scheme with effect from this year. Scheme may be launched whenever possible. What is the constitution? CIT appeals is one human being. ITAT is an organization. So it's a national level body which is constituted by the central government, where they will be having a president. Anybody who has been vice president or anybody who has been high court judge for minimum 7 years can become the president, and then there will be members. Member from law background and member from accounting background. Law background will be called judicial member, accounting background will be called accountant member. Anybody who has been a judge for more than 10 years or advocate of 10 years or more, an officer of Indian legal service can become judicial member. Anybody who has been a practicing CA for 10 years or officer of Indian income tax services for 3 years, then in that case you can become accountant member, but a case will be heard by a bench. Single member bench means one judge for cases of income up to 50 lakh. 99% cases it will be a division bench when there will be 2 judges, one JM, one AM. Both will be sitting on the bench and hearing your case, and special bench for special cases we will be having 3, 5, 7, 9, 11 judges. And if there is any, because 99% cases are handled by them, if there is any division of opinion, then they will request the president to add members, convert the division bench into special bench, and then majority decision will be taken. This is how ITAT functions. We have a table where powers are given. Most of the powers are available only. My suggestion is learn any 5 powers which are available and focus on what is not available. In ITAT, if you observe 2 powers are not available, ITAT cannot enhance assessment and cannot review, reconsider, reappreciate, that is change in opinion. 2 powers are not allowed to ITAT. Review and enhance, review and enhance. And 4 powers are not available to CIT appeals. Set aside power, because that is available only to CIT. CIT appeals can annul, not set aside. Review is not available to both of them. AO also. Review power is given only to High Court, Supreme Court. Only High Court, Supreme Court. Okay. Power to award cost. If there is a false appeal filed, fake appeal, frivolous appeal filed, ITAT can give compensation, but CIT cannot. And stay of recovery as per Act, we will say not available, but after Madras High Court judgment it is available. So you need to know both. So you need to just learn the 4 powers not available under CIT, the 2 not available under ITAT. The rest, like making inquiries, additional evidence, all other powers are available only. And this takes us to the appeal with High Court and Supreme Court. High Court you can go only if question of law, when the Act is silent, no case law, nothing. And Supreme Court you can go only if High Court permits you to go. We call it special leave petition. Permission granted by High Court to appeal at Supreme Court. Permission granted by High Court to appeal at Supreme Court will be called special leave petition. Form and fees will be governed by Civil Procedure Code, not given under income tax. This has to be done within 120 and 90. So we have 30, 60, 120, 90. CIT appeals, ITAT, High Court, Supreme Court, 30, 60, 120 and 90. Of course, delay condonation, CIT, ITAT can do. So High Court, Supreme Court also can do. They can grant stay, reject, rectify, award cost, all powers which are available to juniors will be available, and they can also review. High Court, Supreme Court can review. See, juniors cannot review. Supreme Court always had the power, and in High Court it was held by Meghalaya Steel's limited judgment of Supreme Court that High Court will also be given the power to review, that is change of opinion. Then there are few sections of repetitive appeals. If the same matter is coming again and again, then you can tell the AO to wait. Let's wait for the year 1 order of High Court, Supreme Court and apply for all future years. That's 158A. Same provision is applicable here. Department can tell the assessee that assessee, we are waiting. We will wait for the order of the High Court or Supreme Court order is here. It is explained here. You can read if you want, and that will be applied to all the future years. And finally, we have this last provision. Whenever a higher authority takes favor of the assessee and department does not appeal, that means department has accepted the case. Now department will not be allowed to appeal in any of the same matter in any assessee's case. So if department does not appeal in one case, department cannot appeal in any case. But CBDT lays down monetary limits for cost effectiveness, that if you are able to recover this much money, then only do further appeal. Otherwise, don't go for further appeal. Such monetary limits are laid down by CBDT. So if the reason behind not appealing was the monetary limit, then department will be allowed. See, to put it in simple language, if department does not appeal in one case, they cannot appeal in any other case. But if the reason for not appealing was monetary limit, then they can appeal in future cases. That's your 268A. With this, we finish revision of appeals chapter, and we have this last chapter in the assessment chunk. There are 5 chapters of assessment. 1 we finished last class, 3 we finished here. It is a very small chapter, only 2 sections. So we will quickly finish. We have a few minutes left, and in that much time we will be able to complete this today. So tomorrow we come with a fresh mind where we have to study the upcoming topics, ITSC, AAR, what changes have taken place, how ITSC, AAR have abolished, how a new organization, interim board for settlement is created. We will talk about all that, but for now we will talk about 263, 264, 2 sections covered here. There are orders of AO, only orders, not intimation, only orders, not intimation of AO that will be revised by the CIT. CIT will be changing orders. So if the AO has not done his duty properly, CIT will change, and now as per amendment, even CCIT can involve. Even CCIT. So only orders, not intimation, only AO, no one else, and change by CIT or CCIT. Any order which is in favor of assessee without making inquiries, order passed without inquiries, or not in accordance with a board circular, not in accordance with a board circular, not accordance with High Court, Supreme Court order, and you have taken favor, basically a setting between assessee and AO, then CIT can and CCIT also can enhance or set aside and call for fresh assessment. Obviously, opportunity of being heard has to be given because we are cancelling this favor now. So liability will increase, Ponge has to be followed. Obviously, it will be appealable because we are increasing the liability. Only those matters which have not gone in appeal. So if there were 100 matters in scrutiny and 10 have gone in appeal, then these matters cannot be taken up for 263. These matters were finalized by AO. So only these matters can be taken up in 263. It can be done unlimited times within the time limit prescribed. What is the time limit to do 263 revision? 2 years from the end of the year in which the erroneous order was passed. So year of the order plus 2 years. 2 years from the end of the year in which the erroneous order was passed, and as per Supreme Court judgment of Elegant Finance Limited, if there is reassessment, the matters which have gone in reassessment, we will count from the reassessment order. But the matters which have not gone in reassessment, that we will check from the original order. Everything cannot go in reassessment. Selected matters go in reassessment. Whatever went in reassessment, we will check from reassessment order, and whatever did not go in reassessment, we will check from the original order. CIT has the power to examine all the documents that are available at the time of revision. Even if they came into existence after assessment got over, they will examine everything. That's your first revision, 263, which is appealable. In 264, we will always reduce your tax. So there was an assessment order in favor of department, we will cancel this favor. That means we will reduce. Last time we cancelled favor of assessee, so we increase liability. Here we cancel favor of department, so we decrease the liability. They say own motion, but he will never do it. Is he mad? Why will he reduce your liability on own motion? They say application by assessee. Assessee will also not do it, even if it reduces tax. Sir, why? Because here you can get rejected. Rejection is non-appealable out of 9. And in the final order, if it does not reduce full tax, reduces only little tax, that final order is also non-appealable. Because of the facility of not being allowed to appeal here, because of the non-facility of appeal, people avoid this. But yes, they have given the provision that assessee can apply within 1 year from order, and time limit to pass order will be 1 year from the receipt of application. If you want, you can read this, but remember, application rejected is non-appealable, final order is also non-appealable, but we can file writ petition if fundamental rights are violated. The most important concept of 264 is this, where maximum questions are asked, that once you go in appeal, those matters cannot be going in reassessment or 263 or 264. But for the other matters, we can do reassessment. We can do 263, but we cannot do 264. Once a single matter goes in appeal, any other matter of that order also cannot go in 264. No matter can go in 264. You have to decide appeal or 264. Both remedies can never be invoked simultaneously. Finally, after assessment order is passed, the assessee has got these facilities. What? CIT appeals 264 rectification, and department has reassessment 263 and rectification. After order also, remedies are available to both assessee as well as department, and now they have said that we will do a T scheme for this also, and T scheme to give effect to all the higher authorities of appeal, revision, reference. They will pass their order, that has to be incorporated in the assessment order and passed order giving effect, we will have a T scheme. For that also we will wait for the scheme to be notified. By that time you are going to become chartered accountants. Well then, ladies and gentlemen, boys and girls, with this we finish our chunk of the 5 chapters under the assessment, and this completes our chapter number 22 of our portion. In the next class tomorrow we will be doing again some topics where the topics may not be important, but there are amendments over there, so you have to focus, and time permitting. So I have settlement commission, advance ruling, tonnage tax scheme, penalties, miscellaneous. Because they are not important, only amendments I will focus and move fast. I might just start TDS in episode 6 so that in episode 7 I finish volume 2. If I start TDS, then in episode 7 volume 2 will get over, and in another couple of episodes your revision, full revision come amendment also will get over. So thank you for watching. Have a nice time. Good night please. Thank you very much. Bye bye.